Hello, hello everyone. In this recording, I'm going to explain more details about the first lab assignment in the Chapter 2 Data Analytic project. This first lab is a practice of the data analytics we mentioned in Chapter 2, belongs to the diagnostic analysis. And the purpose of the research question we have here is identify the differences between the standard cost and actual cost for direct material and direct labors. So if you look for the book, they have the background information for the data we are going to use in the analysis. The standard cost and actual cost, because we use flexible budgets, so you are using the actual volume. So actual volume for production for both the total standard cost and actual cost. Then the standard costing are given by per unit of the material and labor. So for example, the material, because this is a jacket, so the jacket, the measurement of material is square inch. So it requires 120.3 square inch of the material like fabric, and each inch the unit cost is 25 cents. And then the labor hours for each jacket, we need 1 hour of direct labor input, and the hourly rate is 16.5. So this is kind of a review how to read the question correctly before you proceed to the analysis, or is related to the topic we covered in Accounting 232, standard costing and variances analysis. Similarly, we have the actual cost information. So when you compare the variances, we want to make sure the units are comparable, right? So you don't want to compare the cost for 4,200 units with 4,000. Like you say, oh, my expectation is 4,200 jackets, but you didn't produce that much, but that's not the analysis we are going to do. You must make sure we maintain a flexible budget, so the units should be matching with each other. Then the material actual cost, so per jacket, so apparently we can see we used more material than the standard quantity per jacket. So we buy a little bit over two square inches per jacket. But the material cost per unit is 1 cent lower than the standard. So we be careful. We are trying to separate the quantity difference and also the price difference. So that's the purpose. You don't want to mix up. If you mix up the cost, then we couldn't separate into the differences and give useful information for future improvement. And the labor hours we used more, slightly more than the standard hour per jacket, but the actual pay is 50 cents. So you save on the labor price, but not on the quantity. But for labor, mostly because they involve human beings, we don't really say quantity. We say, I think I remember is like efficiency difference, right? The labor hour reflect the efficiency of the operations. And then the price difference we call rate variances, because for labor is hourly rate. So efficiency variance and rate variance. So that's more. But if you just call quantity variance and the price variance is nothing wrong, like say that's probably I believe the analysis they used. So, but is it here? Oh, they use rate. But anyway, so you need to read the background information correctly and understand the goal or purpose that your research question. Then we need to implement the right method. like, so how we are going to separate the price difference and the quantity difference. So this is normally the framework we set up for the variances analysis. We have 3 items. So if you recall from 231, so we set up 3 items. The left side, I'm going to use the material as example, and the labor is almost identical. So the actual cost equals to the actual quantity times the actual price, right? That's easy to understand. But when you apply the calculations, be careful. I'm looking for the total actual cost rather than the cost per jacket, because always, even when I teach the 232, when we do the manual homework, some students will only put this item. So per jacket, but we need to combine the per unit with the volume. So when you see the calculation here, the actual quantity should be the total actual quantity rather than the material only for 1 jacket. So we total actual quantity. So you can see the formula is the 4,000 jackets multiplied by the square inch per jacket. That's the total actual volume. The actual price is per unit, right, per jacket. So that's understandable. So multiply by the 24, you got the total actual cost for the 4,000 jackets. So that's the very left, the actual cost. Then on the right, so I will go to the middle item, okay, after you finish this. So standard cost on the right is the calculation for the same 4,000 jackets, but we are using the standard quantity per jacket and also the standard price for the per square feet of the material. So the square, let me this one. So total standard quantity, okay, rather than for 1 jacket only. So we give you the per jacket information, so you will remain flexible on the output. We can use the per unit to apply to any volume of production, right? That's how the standard is set up. And for this one is the 4,000 multiplied by the standard material per jacket. And then apply the standard price is 25 cents. So we got the standard total cost, okay, which seems to be higher than the actual cost, right? So 120 something and 170. But if you only have these 2 items, actual cost and the standard cost, by doing deduction, you can find out the total direct material variance. But we still couldn't separate how much this variance is caused by pricing and how much is caused by quantities. That's why in the middle, we manually create an item. So there is no, so this item is really not meaningful. Okay, so there is really no representation of this data in the real accounting system. So it's something we mix the total actual quantity, be careful, the total actual quantity, and then the standard pricing. Wait, let me see whether I can. So you can see this is a mixed item for the actual quantity by standard pricing. So this is like a bridge, and this bridge will help us to break down the total variance into the quantity variance and the price variance. But this is a mixed number. It's not really economically meaningful. Okay, it's only to assist our calculation. Now let's move down, you can see. So after you got all of the 3 numbers, okay, then you can calculate the 3 variances. First, the total material variance, as I mentioned, it should be the difference between your total actual cost and the total standard cost. And because you already involved I'm saying the sons. Okay, so that's like, so it should be, this is a favorable, because why I say is favorable is like it's a green color, because the actual cost is smaller, is less than the standard cost. So this means favorable. Okay, means we saved cost, okay, on the total material variance. And then we couldn't still tell the reason. Okay, why we saved about 2,400 this month. Then now we break down into more details. So first, let's compare number one to like the left item and the middle one. So left one is actual total cost. Then I summarize. Okay, so what we are calculating here is the price variance. So how much of this total variance attributable to the price variance? I put a formula. Okay, it's not in the tutorial or not in the instruction. I put it here to help you warm up, right? So this one, when we calculate, identify the price variance, you must compare the actual price per square feet with the standard price per square feet, but based upon the actual total quantity. So you are doing the calculation directly here, but if I do, for example, is like to answer a multiple choice question, that's how I'm going to do. Use the 4,000 total jackets, and then times the 122.53, okay, which is the actual quantity per unit. Okay, so total actual quantity. Then use the actual price, even like only 1 cent difference, right? So it's a minus, because we already considered, so for the price side, we saved the money, you saved. So it should be giving, and I use a different way. I didn't really compare the total. I directly calculate. So based upon this like a mixed formula. Okay, so standard price and actual price difference based upon actual total quantity. So I believe you should got the same number. Let me see. Yeah, okay. Yeah, you can see. So by doing this, I got the same number as will compare the total cost, actual cost, and the middle number. Either way will work. So again, this is a green color because I got a negative variance. So means the actual price is smaller than the standard. Again, it's a favorable variance. Then looking for this side, the quantity variance. The quantity variance is the difference you use the middle number minus the standard cost. Okay, if you're looking for the totals. And if I want to use a direct formula, I'm comparing the actual total quantity for the 4,000 jackets, then minus the standard quantity for the 4,000 jackets, but based upon the standard pricing, okay, 25 cents. So again, if I'm doing the I don't know what, oh, it should be 0.25. So actual quantity, we have it here. Okay, so I'm copying the number directly. So 490, and then 480, 120. You should get the same number. 2,500 unfavorable variance for quantity variance is the usage. Okay, we use the mold material on the jackets as we supposed to be based upon the budget or based upon the standard cost. Okay, so this is unfavorable. So green color means favorable and unfavorable is pink. And now if you combine these two, okay, like the favorable and unfavorable, you will exactly get the total material variance, okay, on the left side. So this is just the Excel implementation of our variances analysis in 232. For you to do this work, okay, not only I just make sure my Excel is right, I follow the instructions, but this is also a nice review for the important standard costing system and variances analysis. Then for the direct labor variance, you just do similar thing. Again, don't forget the labor hour and the actual hours. Standard hours, you need to use the total, okay, rather than per jacket. So it should be like standard is 4,000 times 1. Okay, that's the total standard. And actual the hours is 4,000 times 1.06, because I did receive like if you don't have this multiply, so you only probably have 1 hour and 1 hour 6 minutes 1.06, and the number you got wouldn't make sense. Okay, so similar structure, but as here the only thing we change is the quantity. We change to hours, and the price we change to rate because that's more suitable for labor cost. Then everything you have the actual cost, standard cost, and a mixed number in the middle. Okay, mixed number. And then we can identify the total labor variance and the labor rate. Okay, just to put a reminder. So labor rate is your price variance, and efficiency variance is the quantity variance. So we have price favorable, but the quantity unfavorable. Okay, it's more very similar to the materials. Okay, we saved on the price or rate, but we spend more on the usage. Okay, less efficient on material and labor usage. So imagine you are a manager, right? So once you got these pieces of information, so how you are going to address the concerns and make improvements in the future. Okay, because you probably want to increase the favorable efficiencies and reduce the unfavorable. Okay, like in your controllable range of operations. Okay, so that's the lab 1. I just want to have a catch up because lab 2 and the bank reconciliation and also the forecasting is really straightforward, right? And the interpretation, you can make some really intuitive interpretations and inference, right, for the results. So I will just focus on lab 1, but if you do have other questions, please email me or drop me a message, okay, so we can address it.